Today on Inspired Money.
Most people can get into the stock market and they can do it typically at a pretty young age. And if you leverage time and compound interest for you, you can build wealth by yourself with pretty little effort. And it's something that any of us can do.
This is episode 87 with author, personal finance expert, and creator of Broke Millennial, Erin Lowry. Welcome to Inspired Money. My name is Andy Wong, a managing partner at Runnymede Capital Management. Each week, we bring you an interesting person to help you get inspired, shift your perspectives on money, and achieve incredible things. From making it to giving it away, Inspired Money means making a difference, creating something bigger than oneself, and maybe, just maybe, making the world a better place. Thank you for joining me. Hey, Inspired Moneymaker, welcome back. If it's your first time listening, welcome. Inspired Money is different from other personal finance podcasts because we don't want to just learn how to live with money. We want to help each other to live richer lives, make a greater impact, and together make the world a better place. Today, we're talking with author and personal finance expert, Erin Lowry. Erin is 29 years old. She does the research, has published 2 books, and is a great speaker. She's hustling to help you get your financial life together, no matter what your age. By the way, that's hashtag GYFLT, get your financial life together. See, I told you that she's a millennial, right? Well, in this episode, you'll learn what full frontal financial nudity with your significant other means, why investing is the great wealth equalizer, and if you're not doing it, you're missing out, and tactics that the wealthy use to grow and preserve their money. Now let's get inspired with Erin Lowry. Erin, welcome to Inspired Money. I'm so excited to have you on the show.
I'm pumped to be here.
Let's jump right in. What's your earliest childhood memory of money?
Oh, well, that's actually a hotly debated question in my household because it depends on if we're being very specific about currency itself or about the concept of money, because I'm going to give you 2. The actual first memory I have was candy tax at Halloween, which therefore is not technically money, but I was learning about taxation at a very young age because my dad's policy was if he and my mom had to walk us around the neighborhood to get candy, then they should get a cut. So when we would come home and dump out the big bag of candy, he would pick out his favorite pieces and take them. So that was one of my first memories, although I wised up really quick and started hiding the good stuff in my costume so that when I dumped out the bag of candy, it was like the Tootsie Rolls and the healthy snacks.
Candy tax shelters.
Candy tax shelters. But my real first money memory, and the one I talk about the most often, is Krispy Kreme donuts. And that is that my parents, even at the tender age of, I was 7 years old at the time, were not big on handing me or my younger sister money. If we wanted to buy something, we had to figure out how to earn money. Obviously, when you're a child, your earning opportunities are pretty limited. So one of the things that I conceived of was to sell Krispy Kreme donuts at a yard sale that my mom was having, because I theorized if people would come buy our junk at 7:30 in the morning, they probably would buy donuts from 2 cute little kids. So I pitched the idea to my parents, and my dad agreed to back me in my venture. He also agreed to actually go physically buy the donuts because, again, I was 7. And I set up my little Fisher-Price table. I used my sister to kind of lure people in. She was 4 at the time, had these adorable big blue eyes. And we sold out very, very quickly. I was pumped. I was very certain that I was going to go to the, well, now defunct Toys R Us and get 2 Nerf gun super soakers. You remember those water guns from the 90s?
Remember them well.
Yeah, those were the best. And I was so excited. And I had this pile of, I want to say $20 of quarters on the table. And my dad comes over and he was like, well, your sister worked for you for a little bit, so let's give her $2. And then I actually went and bought the donuts for you, so you have to repay me for the donuts that I bought. And those cost me $8. So really, your net profit is $10. And then he took the money. And I felt very cheated. And that was one of my actual first memories, not only of figuring out how to earn money and understanding exchanging time for money, but also that it's not always exactly what it seems, because I thought I was earning 20 at the end, but no, I had to actually pay for the product and pay my employee.
Well, it's an important business lesson. And what I love about that story is that it's the story that keeps on giving, because I've seen your friends who, when you're at an event, they bring you a box of Krispy Kreme donuts. So
Yeah.
not too shabby.
I actually need to become like a spokesperson for Krispy Kremes. If
Right?
they ever could please hear this. Yeah, I would love to work with you. Big fan of both your glazed and your chocolate top cream filled donuts. I also have another great Krispy Kreme memory, which was as a child, for every A on your report card, you could take it into Krispy Kreme and get a free donut for every A. So talk about incentivizing young children to get good grades. It was very exciting for me when report cards came out. Also talks about me being a little bit of a nerd as a child.
It's good to set goals.
I've always been very motivated by sugar.
So, Erin, you are known as the Broke Millennial. And I don't know, it's a misnomer in many ways, because those who don't know you, they may think that you have no money, but it's really the opposite. You're trying to teach people about money. Can you talk a little bit about your unique path, how you became the Broke Millennial?
Well, I will start by saying I'm not the Broke Millennial. The brand is just Broke Millennial. And the reason I make that differentiation actually is because of what you just said. I am no longer broke. I have been there, but it really is meant to be more of a generational moniker in the fact that I started what was originally a blog back in 2013. At the time, I was 23 years old. And yeah, I felt broke. My first year in New York at 22, I earned $23,000 working 3 different jobs. And, very cash strapped, just had basically enough money to pay rent and get around with a Metro card, and really no extras, of course. And then I moved up to a job that paid me $37,500, and I felt rich. Although, lifestyle inflation catches up with you real quick. All of a sudden I could afford to once a week go out to lunch, and then that's where all the extra money went. And I really did feel like a lot of my friends were in the same situation where they just felt constantly in this paycheck to paycheck kind of broke cycle, except the difference being that I actually wasn't in a paycheck to paycheck cycle. My second job, I had a 401k. I was starting to put money away for retirement. I was actually saving money, and I felt very in control. Even at the times that I was only earning $23,000, I still knew how to control my money. And it was really eye-opening to me, and this sounds so silly and very naive, but I just explained how my parents were teaching me about money when I was 7. So I grew up in a household where we talked about that. And what you grow up around is normal. And you kind of extrapolate and think that other people grow up that way. And I was quickly realizing in my early 20s that that wasn't the case. And even friends of mine who came from relatively privileged backgrounds, some of whom were on what I like to call parental welfare, meaning their parents were subsidizing their lives, still were incredibly stressed out about money. And I wanted to figure out a way to solve that problem. And at the same time, I wanted to keep pushing myself to learn more. And I also wanted a creative outlet. And in 2013, that meant starting a blog. I guess if I was doing it now, it probably would be a podcast, or it would maybe be a YouTube channel or something like that. But it really just started with me telling stories about my own life and how my parents taught me about money, and my early 20s, how I was learning about it, and kind of the trial by fire version of figuring things out when, I wasn't business, finance, anything that kind of translated to being quote unquote good with money. I was a journalism and theater double major in college. And part of my philosophy is, if I can figure this out, so can you. I won't accept any excuses of I'm bad at math. I just don't understand it. I'm just not good at it. You can control your money.
Journalism and theater. No wonder you're a YouTube star. No wonder you're great on YouTube and on TV. Now, what kind of jobs were you working? Did you know that you would become a personal finance expert?
Oh, heck no. I still say if you told 18-year-old Erin that this was going to be the trajectory of her career, I would just laugh in your face and be like, good jokes. Because I, especially anything money related, I just never, again, with this, completely fiction of, oh, I'm not good at math, therefore I'm not good with money. I certainly thought that. I remember in college, business was something I completely wrote off as an option because I'm like, ugh, I just hate dealing with numbers like that. Like I wouldn't be good at it, which is stupid. But I mean, to back it up what I was doing at the time, I will also say in college, I knew I wanted to be in theater. That was the original goal. And I actually had this huge dream of moving to New York City, which is still where I live today. And in order to do that, I knew that I had to come out of college debt-free because I knew if I had student loan debt, I wasn't going to be able to take any career risk and I was going to just have to go get a job. So I ended up going to college that gave me scholarship money. My parents covered 50% of my college education, and then I covered the other 50% with scholarships. So I was able to graduate without any student loan debt. While in college, I worked as a resident assistant in order to save up money, not because it was a glamorous job that I wanted to do. And I actually had a nice little nest egg coming out of college that enabled me to move to New York. My first job was working as a page for The Late Show with David Letterman. So I was in the entertainment industry, but that job was part-time with really weird hours. It doesn't tape at night. It's not live, so it doesn't tape at night. It tapes in the middle of the afternoon, which makes it really hard to find other part-time work. And it did not pay great. And your pay kind of increased a little bit the longer you stayed. But for context, the first paycheck I ever got from that job, I think was $197 for a week of work. So I knew I had to work other jobs. I was a barista at a well-known mermaid logoed coffee chain. And I was also a babysitter. So that wasn't super stable. It would very much depend on whether or not parents needed a sitter, but I had about 4 different families I would work for. So I usually was pretty active. And that also meant my schedule looked like about 4:25 wake up call, 5 o'clock having to be at Starbucks to open, working the first shift, getting off at about 11 to 11:30, then going into work at Letterman, and then after Letterman, which would wrap, depending on show day, between about 5 and 7, then going off to go babysit and rinse and repeat. So I was working very long days a lot of the time and still only making $23,000.
That sounds busy. Yes, I did make it to a David Letterman taping once, and I think they were recording 2 shows on Thursdays, right? Because they would take Friday off.
Yeah, double show day.
So on the one time that I went there and I had looked up online and I was like, I think Peter Gabriel is the guest. This is going to be so cool. But I didn't realize that there were 2 tapings, and I was not there for the Peter Gabriel taping. I was there for the Mary Lou Henner taping. And I love Mary Lou Henner from Taxi, but she was promoting a book, which really wasn't that interesting. I was really sad that I didn't get to hear Peter Gabriel. But anyways.
What year was this? Because I saw Peter Gabriel in 2011 when I was there.
It may have been 2011. That sounds about right.
Yeah, because I actually it took forever to set up because he had like a full band with him. And it was great, but I think it was like a 40-person orchestra. I just remember the changeover took so long and we had to keep the audience like happy and engaged during this 35-minute pause and setup.
Oh, wow.
So I have a very vivid memory of the Peter Gabriel taping.
Yes, that must have been the one. I think I was there that day, but I was there for the other taping.
That's crazy. Our paths crossed. You actually would have interacted with me.
Yep, that is funny. So you were working multiple jobs, and I noticed that in your writings, you credit your parents for, giving you these lessons in frugality and self-reliance. But I think most importantly, like by example, because you lived overseas as a kid and you mentioned that your parents were saving 80% of your dad's income. Like, can you talk about some of the lessons that you learned as a kid?
Well, I didn't know that information until actually just a couple of years ago. My dad has his own blog, and he shared that little nugget on a story that he actually wrote. And I knew that they must have saved a lot because as expats, the company covered quite a few things. So my education, my sister's education was paid for. And we went to, in the United States, it would be comparable to going to like an elite prep school. So the international schools that we went to, the price tags on those were not cheap, depending on which one we were in. It was anywhere between about, I think, 25 and 30 to $35,000 back in between 2000 2011, which is when I graduated. So that was paid for by the company. Most of our housing was paid for. I think most of utilities were covered. So a lot of our basic living expenses were completely covered. And therefore, my parents were able to save a ton of money. But I wouldn't have known, because we lived a pretty comparable lifestyle to what we had been living before we moved. The only thing I would say they inflated, and it still shows in kind of what I do with my money now, is we traveled a lot, and it was very nice. We stayed at nice hotels. We went to nice destinations. And I, to this day, I mean, I'm not on that level financially to be able to ball out the way my parents did, but I do really prioritize travel. They did not spend a lot on clothes or jewelry, gadgets in the house, furniture, things like that. And that's not to say that people shouldn't spend there, but you should spend in a way that aligns with your values. And my parents really walked the walk that they were talking about. They were very focused on, padding their bank accounts, and they didn't inflate their lifestyles a whole heck of a lot. And that was very evident in the household.
That's amazing. Well, when you're saving 80%, you can splurge.
Yes, you can. And also, my dad traveled a lot. So he had a lot of frequent flyer miles and pretty high status, which also helped leverage a lot of things as well, which is nice.
Wow. So your blog eventually led to your first book, Broke Millennial, Stop Scraping By and Get Your Financial Life Together. What are some of the central themes of that book?
So that one is really an A to Z, step-by-step, however you want to put it, guide to the basics. And it takes you from you are just completely at a loss about what to do. You don't have a budget. You're living paycheck to paycheck, probably have student loans, maybe some credit card debt, just trying to figure out how to survive, and tries to put you in a position where you take back control. And I start the whole thing off by talking actually more about your emotional relationship to money, because I do think that that's a critical piece of the entire puzzle. You can't really figure out how to control money if you also don't know your emotional reaction to it and why that exists. So it does start with that sort of an analysis first. It encourages people to dig in to try to figure out why they react the way they do to money. And then it takes you through just a lot of your classic budgeting, saving, different strategies for paying down debt, how to build a credit score and protect a credit score, all of those classic foundational pieces of your financial life. And then a little later in the book, it gets into some very brief investing conversation, talks a bit about buying a house, talks also about what I love to call getting financially naked with your partner. So how to talk to your partner about money, as well as how to talk to your friends, call it can't afford to split that dinner bill evenly, just the early things that you face in your financial life, but then also things that are a little bit further down the road, and also ending with something like, how do you hire a financial planner? So it's really kind of an all-encompassing guide. I was at an event I hosted last night. A woman came up to me and was talking about book one and said, I was 21 when I read it for the first time, and I got to the home buying chapter and I thought, this isn't for me. And so I've never read that chapter. And I said, actually, that's exactly how the book's structured, though, because each chapter does stand on its own. And my hope was that in the future, as your life evolves, you can just go back to it, and there's still something now that's relevant for where you have phased into in your financial life.
Different media outlets love the financially naked headline. And it makes for
Yep.
really good clickbait, because they always have your photo there, and then it has the word naked, and it makes readers click on it. What does that mean when you say that people should get financially naked?
Well, I'll actually level you one up, because the title is How to Get Financially Naked, but I think of it as a two-pronged process. The essential meaning of it is you're bearing it all financially to your partner. You're telling them all of your information, from income to debt to credit score. And I even encourage people to talk about their money baggage, because I think it helps you understand your partner better and why your partner reacts to certain things, which is really helpful in a relationship. But I have it as a two-step 101 level. The basics is, you're dating, you're starting to get context clues about how your partner values money or perhaps doesn't value money. And these can come in any form, from who pays for dates or what the expectation is, how you take trips together if you go on a trip, the kind of gifts that you give to each other, the type of lifestyles you want to be living. And you can start to suss out information about your partner that way. But then the next step is full frontal financial nudity.
That's the headline that always catches people's attention.
Yeah. And that is truly the idea of you are bearing it all to your partner.
And this is something that it's like you practice what you preach, right? I mean, I'm since we're talking today, a double congrats because you got married fairly recently and then also the launch of your second book. But these are things that you did, right, with your fiance at the time.
Well, way before we were even engaged, we were getting financially naked. And that I share a lot of that anytime I do a presentation about this or even in the chapter about it. I like to draw on stories and my own experiences. And I always make the joke of do as I say, not as I do, because the first time I tried to bring it up, I very nonchalantly, without any tact, said, "Hey, how much student loan debt do you have?" And it wasn't terribly well received at the time because of how I had positioned it. And that's one of the things that I always say in the beginning is how do you even start this conversation? It's not like that. Like there are so many steps that you take before you even start asking those questions. But yes, I do what I preach in the sense that we talk about money a lot. We definitely shared all of our information ahead of time, which was also a requirement because we did get a prenup before we got married. So we definitely were getting into all the nitty-gritty during that process as well. And fortunately for us, we had talked through all of the money details well in advance. So there were absolutely no surprises when we were going through that process.
Yeah, that's really healthy. Now, if you could go back in time and do it over again, you have a better entree into that conversation, right?
I do. And the first thing I recommend people doing is you need to reflect on what you want to be asking your partner and also what you want to be sharing. This isn't a one-sided thing. So there has to be an idea of when you first do this, it doesn't have to be everything all at once. And I do think that that's kind of part of a fundamental misunderstanding about it is the term makes it sound like just in one conversation, you bear it all. It can be an evolving process. So definitely one of the early steps is just figuring out what you want to ask, what you want to know, and what you're willing to share. And then you need to actually set a time with the person. You need to say, hey, this is a really important step in our relationship. I really want to talk to you about money. What time would work for you?
Right. Don't do it at the movie theater.
No. And I always say, don't do it in public. It needs to be at home, just the two of you, preferably no roommates around or anyone else. Because doing it in public, this conversation can get tense and then it like layers on the tension if you're trying to have it out a little bit in a public space. So just do it at home in a more private, protected environment. And you also need to give your partner a chance to think through what he or she wants to ask, what he or she is willing to share right then and there, which is why it's important to be setting that time and not just flippantly saying, hey, how much student loan debt do you have?
Coming up, we talk about Erin's brand new book, Broke Millennial Takes on Investing, investing for retirement and more. But first, a more graceful and deft way to open up a money conversation.
In terms of how to actually start it, because that's always the big question, right? Is there are two different approaches that I personally like. One is just that awkward and honest, hey, I know this is kind of an awkward thing to talk about, but I do think it's really important. How are you feeling? Just touching in with each other before you dive in. But my personal favorite, I like to kind of backdoor into the debt conversation and say, what's a financial goal that you have in the next 5 years? Partner shares, and you say, and what's something that's standing in your way? Really easy way to ask about debt without actually saying the D word.
I like that. The financial judo move.
Yeah.
I love that. The show notes for this episode can be found at inspiredmoney.fm/087. If you're listening in your car or wherever you are, check the show notes if you want to learn more about Erin or things mentioned in this episode. It's time for the Runnymede Money Tip of the Week. So do you know if you're going to be getting a tax refund back this year? I hope so. If you're not and you're having a hard time saving, you might consider increasing your withholding next year. It's not always the best idea to have the government hold your money because You could be investing that or using it, but sometimes it's a great way to force yourself to save. If you are getting money back, I want to give you 3 quick ideas for what you could be doing with that money. First, start or increase your emergency fund. Without an emergency fund, a single surprise major expense could put you in trouble. It could put you in debt. It's recommended that you put 3 to 6 months worth of savings in an interest-bearing account, like an online savings account. Now, you don't have to have 3 to 6 months of extravagant living and dining out expenses. Just save enough to cover your food, shelter, the essentials. Second, pay off high-interest debt. After you establish your emergency fund, the next best thing you can do with your tax refund is reduce or eliminate any high-interest debt that you may have. Pay down the highest interest debt first. Or you could use the counterintuitive debt snowball approach, where you pay off the smaller debts completely. And that way you're shrinking down the number of places you owe money. It feels really good, and it will give you momentum to continue. Okay, there are a whole lot of things that you can do with your tax refund, from home improvements to buying something that you need to charitable giving. Since we're talking to Erin today about her new book, number 3 is to invest. And you have a few choices here. I recommend first investing in a tax-sheltered account. Depending on your income level and whether you've already fully funded your tax-sheltered accounts, get a head start on Roth IRA contributions or 529 college plan contributions. You might just find that this makes your tax refund that you're receiving now even bigger several years from now. And of course, if you've already contributed the maximum to your tax-sheltered accounts, considering adding money to a brokerage account or opening one if you don't already have one. You can buy index funds, exchange-traded funds, or stocks of high-quality companies. If you're getting a refund, think about these choices, 1, 2, or 3, in that order. That's the Runnymede Money Tip of the Week. Inspired Money is brought to you by Runnymede Capital Management. We help you to plan, invest, and worry less. So what's your biggest financial challenge right now? Do you need help or have a money question? Go to inspiredmoney.fm/Andy to email me or schedule a 15-minute call at inspiredmoney.fm/15. We can talk about anything, your money, this show, your 401k. I'd love to hear from you. You're listening to Inspired Money. I'm Andy Wong. Okay, so you wrote the second book. The new book is Broke Millennial Takes on Investing. And I imagine that that's because, as you said in the first book, you touched upon investing, but it wasn't the focus. So I'm sure that you get a lot of questions from people, from your readers saying, all right, I got my financial life together. Now what? And in this book, you call investing a wealth equalizer. What do you mean by that?
What I mean by that is that most people can get into the stock market, and they can do it typically at a pretty young age. And if you leverage time and compound interest for you, you can build wealth by yourself with pretty little effort. And it's something that any of us can do, and we don't have to invent an app that's going to sell for millions or billions of dollars. We don't have to create our own company. We don't have to be entrepreneurial or super smart and a genius. Anyone really, and again, I say anyone, and I know that there are some people who this is difficult, but most of us have the opportunity to build wealth with the stock market, and it's a relatively low barrier of entry, but it feels so intimidating. And that's the real reason I wanted to write this particular book is you're right. I started to get questions like, hey, I got it together. What's next? And one of the things, too, that kept coming up was I had a very small investing chapter in book 1, really did primarily focus on retirement because that is how most people start with investing. And at the end, I recommended a couple of books that I think are great investing books. And some folks started to say, hey, I tried reading those books and they're a little bit too complicated. And these are positioned as for beginners. And they were right. A lot of the books that exist in the market, even the really tried and true old ones, are still written in a way that if you know nothing it feels really intimidating and honestly kind of makes you feel stupid because it's like, well, how am I supposed to magically know what these terms mean if you're not going to explain them for me?
So true. I mean, I'm a financial advisor and I've had meals with clients, especially younger clients, and they say, I don't know the terms. I don't know what a stock is. I don't know what a bond is. So I really like that your book has a chapter dedicated to terminology.
Yeah, one of the earliest chapters. And I do think that decoding the language is one of the most important parts of the entire process. And I liken it in the book, because I love to start everything with a story. I liken it to sitting in algebra class where I just remember the teacher talking and I didn't have any clue what he was saying because I didn't understand the language of algebra. So like, you say coefficient, but that doesn't mean anything to me. So how am I meant to solve this problem? And investing is really the same way. I can rattle off that it's important to build a well-diversified portfolio based on both your risk tolerance and your time horizon. But I have now lost my listener because they do not know what those terms mean, even though in my mind, like, oh, well, those are really basic, seemingly easy to understand terms. But it's not if you haven't learned what those terms mean.
So in this book, in the work, in the research that you did, you call yourself a translator because you relied on a lot of financial experts.
Yes, I think it's really important to say that I am not an investing expert. I'm 29. I'll be 30 in May. I have experienced almost exclusively a delightful bull market. A little bit of dips here and there, but pretty much just a great market. So also, I don't have the experience as well to talk about what it's like to go through a recession, what it's like when the bottom falls out, how you're emotionally going to react to that, what it's like when a bubble bursts and your portfolio drops by 50% overnight. Like those are things that I have never experienced. And I did also need to talk to not only people who work in the industry, but people who had experienced those types of things because it's gonna happen during my life as an investor. And I wanted to be able to bring that side of it in as well. But yeah, I'm not an investing expert. I don't have any of the certifications. I haven't had a storied career on Wall Street or anything like that. So I like to position myself as a translator. Plus, I think it works to my advantage because when I was interviewing people, I could keep saying like, well, stop, I don't understand what you're saying. I need that to be further simplified because I knew my reader was going to feel the same way.
You have had a nice 9-year run because like you add an extra 10 years to that and you've seen like craziness because I joined my father's business about 20 years ago. And like in short order, I saw the internet bubble, crazy speculation. Then I saw a crash. Then I saw a recovery. And then we had the financial crisis. I saw another crash. I've seen like massive cycles happen and not in that much more time than what you had.
But still enough. And I'm sure that I will earn my stripes soon enough.
Yeah, so I've got the gray hair to prove it.
There is something to be said about that. And I do have people interviewed in the book that are younger, that are closer to my age. And, you know, it's good to have all perspectives. But I did want to make sure I got in some voices of people who have been investing for quite literally decades, some of whom have been investing for longer than I've been alive.
It's really good that you have that diversity. So, Erin, a lot of people, they're not sure how to get started with investing. Is it mindset? Is it a need to do research? How does one take the leap?
All of the above, I would say, for sure. For a lot of folks, the easiest way to get in is with a retirement plan. And I really am on a campaign to change the language that we use because we keep saying save for retirement. And that really is a misnomer. You are investing for retirement. And I also think that because people say save, there are folks who do just legitimately have their money, even in a 401k, sitting in cash, which is a nightmare because compound interest is not working for you. You are not building wealth, but they don't know any different because they just opened an account and put money in and assumed that it was just magically going to grow as they've been promised. So that's one of the things. I would also say education is an incredibly critical part of this entire conversation. You do need to start educating yourself. You do need to understand the language that's getting used, even if you're going to hire a professional or if you're going to turn to a service like a robo-advisor to kind of outsource part of this for yourself. totally fine, but you still need to be educated about the language that's getting used, what it means for you and your money. And that, I think, is the biggest piece as you're starting out. Then, of course, you actually have to know how to go to a brokerage and actually open an account and put money in and pick an investment or many investments in order to be putting your money in the market. But the book does get into all of those details as well.
Yeah, I think one of the beautiful things about investing, like anything else really, is that you can make it as complex or as simple as you want to. And too often we make things too complex. Like everything could be distilled down to simplicity. And then as long as you do it, like that's the key. It's like get started. And even if you just own an S&P 500 index fund and that's it, you just own one thing. You get started, and that's the key because time and compounding are your two best friends.
Yeah, it's time, and then consistency, I think, is the other big part of it, is making sure that this is just a regular part of your financial life, that every month you are putting money in, and that's just part of your budget. I know people hate that word, but it's important.
I heard you say somewhere that you have rebranded that word, budget.
I have. I like to call it cash flow. It just sounds sexier. People don't necessarily cringe right when they hear it. And it is what you're doing. You need to know exactly how much money is coming in and how much money is going out. And without that information, you do not have control over your financial life.
It is a better term. Cash good, flow good. You put them together. It feels good.
It does. Gives you those warm and fuzzies instead of the cringies.
Exactly. One of my favorite parts of your book is chapter 14, Tactics the Wealthy Use to Make and Preserve Money. Can you talk a little bit about what you learned in that regard? Because it's almost like secrets that you learned from wealthy people.
It was so interesting. So it was a combination of people who have their own wealth and then a lot of people who work with people who have wealth. Some of the people that were interviewed for the book worked for literal billionaires, and just the information, the stories that they have to share is so fascinating. And then you also get some of the same, start early, be consistent, be diversified rhetoric. Like, this is exactly how they built their empires. I think some of my favorites that aren't necessarily a tactic the rookie investor could use starting out, but it's knowing the rules of the game and, unfortunately, knowing the loopholes in the sense of there's a lot of tax evasion, legal tax evasion that's happening in these upper echelon levels. Like, that was a lot of the stories I was hearing. It was like, here's how I helped someone save $40 million on taxes. And my mind is just exploding. So that was really just interesting to hear about. But one of my favorite takeaways from that chapter, other than the voyeuristic writing about how billionaires are getting around taxes, is actually came from Sally Krawcheck. And she talked about emerging markets. But she had such an interesting take on it because she was saying how when you work, and this is, I'm of course paraphrasing, but when you work in a, very well-established, maybe older industry, you usually have to be about 10% better than everybody else in order to move up the ladder quickly and make more money. And if you're working in a declining market, that number is even harder. But if you go into an emerging market, whether that's a new industry, so maybe tech 20 years ago, or if you go into a country that's an emerging financially, kind of becoming a powerhouse of a country, just kind of starting out, there are so many more opportunities to quickly build wealth if that is the end goal. And I thought that was just such a fascinating way of looking at it. And it's kind of career advice I'd never heard before. It's like, hey, if you pivot into a kind of wild, wild west marketplace, there's a lot more opportunity for you to move up quickly, as opposed to sort of this tried and true advice of go into something where you're going to be good, where there's a prescribed path, and you can just follow this career path till you retire.
Yeah, that's pretty exciting. And it kind of goes back to even your childhood, because your parents being expats, they did venture outside of the United States and away from home.
That's true. And it was also, my dad, I think, was very early figuring out how to put himself in that position. One of the things that he did, and generally as Americans, we have a well-deserved stereotype of only speaking English. And he had started he's a bit of a linguist. And when he started traveling to Japan a lot on business, he started very studiously focusing on Japanese and was pretty fluent. And that also made him an easy person to tap to send over there. And also because he then could establish better business relationships because he could speak their language. And it didn't feel so much like a outsider kind of trying to come in and impose his own rules. It was really more of a let's work together, and also like a sharing and respect of I'm in your country, I can speak your language.
I love that. And that's one of the bullet points from that chapter too. You talk about having a mindset shift because it's like how you better yourself in your situation all the time.
It is. And I really hope that the takeaway from that chapter, especially, sometimes it can be infuriating to hear how people are saving tens of millions of dollars by having tax loopholes. And I really understand the emotional reaction to that. But on the flip side, there is a lot of information in there that is very mindset focused, and not in the kind of like, sorry to throw these articles under the bus, like clickbait of here's 5 things that all millionaires do in the morning right after they wake up. It's not that kind of stuff. It's just more like here are different things that people have done that really can be replicated in your life. And some of it's very boring advice, but it works.
Yeah, I thought there was gold in there because it's just like, what can you learn from people who have made it already? And you can learn some shortcuts and save yourself from making some mistakes.
I mean, we're going to screw up. It's going to happen. But, if I can screw up and share that screw up with other people and prevent them from doing that exact same one, it's a win in my book.
So, Erin, I love to ask all the Inspired Money guests, how do you define success?
Oh, I really need a better soundbite answer to this question. I would say at this point, I am young, and I think hopefully life is long. But I do like to compete against myself a lot because I can control for that. I think a big part for me right now of success is trying to focus less on the externals and trying to be competitive with other people, and more just trying to feel very proud of the products that I put out and feeling hopefully that I am doing a greater good service and helping other people feel empowered and in control. I remember when my first book came out, one of the metrics I had set for myself was I just wanted to get one email from someone saying that the book had really changed something for them financially in their life. And I remember when that email came in, the very first one I got, I cried. That is just all I wanted to be of service to other people and take what I had learned in my currently short life, but hopefully help other people feel the same sense of control over their money as I did. And financially, though, yes, of course, I have numbers for what I will perceive as successful, but I also think that goal line changes constantly. I think as soon as you achieve a goal like that, it just morphs. And I've spoken with people who have a lot of wealth. And I think when we tie it to money, their first goal is $1 million, but then they get to $1 million and that feels like nothing. So the next one is 5. And then they get there and they're like, well, that's not enough. Let's go for 10. Like it just does almost feel hedonistic treadmill. Like it's never quite enough. You always want more. So for me, honestly, success will also be at some point feeling content with what I have.
I like that. You're right, that when you set a number, it's always moving. It's a moving target. So if your goal is to have a positive impact and to have contentment, then yeah, that's where your focus should be.
And hopefully I'm not there yet. I'm not very good at contentment. I'm very competitive by nature. And that is truly why I say one day I would just like to be happy with where I am and what I've achieved and not constantly be in a state of needing external validation.
Well, I think that even that's a moving target. It's like you reach.
It so is.
It's like what tomorrow is contentment for you today, but then you get there and you're like, you know what? I think that there's another level of contentment that I wasn't aware of before.
Oh no, we could just never win, can we?
No, you're always winning because it's about the process. It's about the process. It's about getting there. So you're always winning. Well, thank you, Erin. Thanks for joining me today and sharing about really getting your financial life together and your approach to investing and getting people started. Can you share with the Inspired Money listener how to follow you, learn more, see you on your book tour?
Yes. So you can follow me on Instagram at Broke Millennial blog and on Twitter at Broke Millennial. And my website is brokemillennial.com. And all of my tour information, I am currently traveling the country on my book tour. I'm also going to Canada, and that's happening we kicked off in New York on April 10th, and it is wrapping up on May 16th. So I will be traveling all around the country. You can find details on my Instagram and on my blog, as well as I tweet about it all the time. So you certainly can find that all there. And I also would like to offer one other thing. If you listen to this and you feel moved to buy a copy of Broke Millennial Takes on Investing, if you send proof of purchase to info@brokemillennial.com, and if you could put inspired money in the subject line, I will send you back my 30-day rookie investor action plan.
Awesome. So buy the book, proof of purchase to info@brokemillennial.com.
Yes, and I will send the spelling of that to you because can't tell you how many people drop the second N.
Millennial is a tricky one.
It is, and I feel bad how many emails I get that's like, hey, thought I sent you this, but then I misspelled millennial. So we'll make sure that that's in the show notes for people as well.
I'll definitely put that in and then inspired money in the subject line. Thank you, Erin. It's always so much fun chatting with you.
Thanks for having me. I loved it.
So what was your favorite inspired money moment? Erin is great at breaking down complex personal finance topics to make them understandable. If you feel like you're a beginner and need to start educating yourself about investing, check out her book. My favorite inspired money moment was when Erin was talking about investing as a wealth equalizer. Whether you have a little or a lot, investing gives you an opportunity to grow what you have over time. Sure, there's going to be risk, but if you start early, set your goals, rebalance as your life and goals change, investing will very likely serve you well. And perhaps most importantly, stay consistent. Thank you so much for joining me today. If you like the show, please share it with a friend. I always appreciate you helping to spread the word about inspired money. And who knows, maybe your friend will appreciate it too. The music you're listening to right now and all other music on today's show is by the amazing Jim Kimo West. Aloha, Kimo. Have an inspired week. Do something that scares you, because that's where the magic happens.